Over the past year, we have undertaken critical reforms to unify Nigeria's exchange rate, eliminating distortions and restoring transparency. This unification has enabled us to clear the outstanding foreign exchange obligations, giving businesses ranging from manufacturers to airlines the confidence to plan and invest in the future. To further enhance the functionality of the foreign exchange market, we're introducing an electronic FX matching system, which has proven effective in other markets. It is also vital to address the disinformation circulating about a supposed demand-supply gap in the FX market, which is fueling unnecessary panic. The current US dollar exchange rate reflects the price that the most desperate buyers are willing to pay. And this, in our view, does not represent the true market value of the naira. It is our expectation that the introduction of the electronic matching system will correct these distortions by enhancing price discovery process. Additionally, it will significantly boost the central bank's oversight and intervention capabilities, ensuring a more stable and transparent foreign exchange market. While the central bank will continue to lay the foundation for price stability and foster a conducive policy environment, the role of our banks in this journey is crucial. An FX market defined solely by when and how the central bank buys or sells dollars is inadequate for the needs of a dynamic economy like Nigeria's. Now is the time for banks to step up to their intermediation and market-making responsibilities, providing customers with the right solutions to run their businesses and manage risks effectively. The ethics and professionalism of bankers and treasurers are under constant scrutiny, which is why we have introduced the FX Global Code for all authorized dealers and market participants. I urge this institute to take the lead in upholding and demonstrating the highest standards in the industry. At the central bank, we have intensified surveillance of market activities to ensure compliance and eliminate bad actors who attempt to undermine the system. Together, we must build a market based on strong governance and transparency. As regulators, we will maintain a zero-tolerance approach to compliance violations. Ladies and gentlemen, our efforts to improve the functioning of our FX market are having the desired impact. Average daily turnover in the Nigerian autonomous foreign exchange market increased by 226% in the first half of the year when compared to the same period in 2023. Foreign portfolio inflows have increased by over 72% during this period, while foreign exchange reserves have risen from $32 billion in May 2023 to over $40 billion today. This represents the equivalent of over 17 months import cover and marks the highest reserve level in nearly 3 years. Building a robust culture of compliance remains central to our efforts. We are optimistic that Nigeria will exit the gray list by the second quarter of 2025. Today, we face significant challenges: money laundering, cybersecurity threats, fraud, corruption, and disparities in financial inclusion. The cost of inaction is profound. Fraud undermines confidence, corruption erodes trust, and money laundering perpetuates organized crime. As you may have noticed by now, compliance is a recurring theme in this speech, reflecting its critical importance to our mission. The compliance culture I envision for our industry is one where, one, executives and boards set the tone by making compliance a strategic priority, championing zero tolerance for breaches, just in policy, but in practice. Two, financial institutions anticipate vulnerabilities and proactively address risks in areas susceptible to abuse. Three, teams are educated to recognize red flags and encouraged to report concerns about fraud, money laundering, or unethical behavior, knowing that they are protected. Four, institutions know their customers and partners, conducting enhanced due diligence, especially for high-risk clients, politically exposed persons, and vendors, ensuring operations are not conduits for illicit funds. And five, the industry collaborates to combat systemic threats, sharing information on emerging risks, cooperating with law enforcement, and maintaining open communication with the central bank and regulators. Starting in 2025, financial institutions will be required to refine their compliance and governance frameworks to address evolving risks. We are enhancing regulatory effectiveness and accountability as demonstrated by recent changes to our supervisory and enforcement approach. Recently, penalties totaling 15 billion naira were imposed on 29 banks for breaches, including AML, CFT violations. In addition to these penalties, the banks are required to address the root causes of the lapses, which is crucial for improving regulatory effectiveness. Transparency lies at the heart of effective governance and public trust. At the Central Bank of Nigeria, we recognize that clarity in policy making and open communication with the public are essential for achieving our goals. In this regard, we have implemented several measures to ensure that stakeholders have access to accurate, timely, and comprehensive information about our operations. The road ahead may present obstacles, but it is a path rich with potential if we move forward with clarity, determination, and collaboration. Our foremost priority is to achieve price stability with inflation as a central focus. While inflation has shown early signs of moderation, we are fully committed to doing everything in our power to tame inflationary pressures in 2025. To this end, we will maintain vigilance through strategic deployment of our monetary policy tools. The monetary policy rate, MPR, will continue to serve as our anchor for inflation management, calibrated on evolving economic conditions and data. The cash reserve ratio, CRR, and open market operations, OMO, will be adjusted as necessary to ensure liquidity levels in the banking system remain aligned with our inflationary goals. The unification of the exchange rate is a pivotal reform, but it marks just the beginning. Next week, the foreign exchange market will begin trading on the electronic FX matching system to further enhance transparency, restore confidence, and attract new investments. Coupled with an improved framework for deploying products targeting the Nigerian diaspora and efforts to establish a well-functioning FX market, we anticipate increased diaspora and foreign investments over the next 12 months, building a more resilient and liquid FX market. Ladies and gentlemen, I recall when we took the view that it was important to focus on the diaspora remittances. And at that time, the inflows then, we said we would double. And people thought it was an impossible thing to do. And it happened. And as a result of that, we're even more emboldened to look at a target of $1 billion per month in the not too distant future. Financial inclusion offers equity and opportunity for all Nigerians. Our goal is to ensure that 80% of adults are financially included by 2026. Through partnership with banks, fintechs, agent banking, and targeted support for women and rural communities, we will create a financial ecosystem that leaves no one behind. Our journey ahead demands trust, and trust is built on transparency and accountability. As regulators, we will continue to engage openly with stakeholders, providing regular updates on policy outcomes and adjusting our strategies based on empirical evidence. This is not just the central bank's journey, it is Nigeria's journey. We are building an economy where every individual, every business, and every community can thrive. This vision will not be achieved by one institution alone. It requires all of us, banks, regulators, businesses, and citizens to work together with steadfast resolve. The challenges are real, but so too is our collective potential. By focusing on transparency, inclusivity, and resilience, we will build a Nigeria that prospers not just today, but for generations to come.